Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, everyone, to Real Estate 360 Live with Ryan Sloper. I'm joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, if you have any questions regarding real estate, whether it's finance-related, credit-related, whether it's just general questions about government programs that you're trying to qualify, HARP 2.0, whatever it may be, we're here as a sounding board, and if I can't answer your questions directly, I will find the professional that can. The best number to reach out to us is 877-245-2030. That's 877-245-2030. Or you can reach us via the web at realestate360live.com. Now it's time to jump into this week's market preview brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. You can go to HomeGain.com today to see what I'm talking about. All you have to do is type in your home address and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free, so check it out today at HomeGain.com. Also, if you're just starting your search, if you're looking for a real estate agent, it's a great place. It's a great resource to go there to be able to compare real estate agents anonymously. And once they, you basically see their profile and you want to reach out to them, then you can do so. All you have to do is go to HomeGain.com. So, Louis, this week it's a little light on things in the market. It looks like a lot of the focus right now, the stock market pulled back this morning because of gas prices rising and fears that that's going to affect the economy. And also, we're right back to the whole Greece situation now. That they're saying that the Greece default is imminent. We thought all along that we knew that there was pretty much no way around this because they're not going to be willing to just completely, take write-downs for the entire amount that they need to. Based on the 10-year Treasury driver for mortgage markets, not much changed in the rates last week. Technically, the 10-year is presently losing its support at these levels, but still holds well so far. What that really means in layman's terms for people out there that are considering refinancing or buying right now is that I really don't see interest rates moving, much higher or much lower. I think that we've really seen, the lows that we're going to see for the next couple years. I've had a conversation earlier with somebody that, any gains that we're actually getting in mortgage rates are being offset now by government intervention. For instance, the payroll tax extension that they got, they actually put in there a guaranteed fee that was going to take place on all mortgages by 10%. So Fannie and Freddie loans, what that equated to was basically raising the interest rates up by anywhere from 3/8 to a half. So what that really means is, rates are at all-time lows, but that doesn't necessarily mean that you're going to get, if it was already at, let's just call it 3.75, and you hear the rates are going lower, with these new fees that are due to kick in, it could mean that it's going to be the same rate, if not higher. And Louis, I think that's interesting because, this is one of the things that people don't pay attention to. A lot of these bills are getting passed, behind the scenes, and really nobody's talking about what's actually going on. But, just think that one fee alone, that guarantee fee for Fannie and Freddie that's going to take place, that can affect the interest rate by 3/8 to a half.
No, it's the same thing with your inflation rate. If you strip out, gas and energy and food, they say the rate is lower, but really it isn't because you can't strip out food and energy.
Yeah, and it brings...
You're going to have to pay that fee, so you have to include that as part of your effective interest rate.
Right, and this it plays in big time for the people that are sitting on the sidelines due to whether they think they're going to get a great deal on a foreclosure or whether they think interest rates are going to fall a little bit more, and that's when they're going to jump in. Little do they know that they're pretty much probably not going to go much lower than they are right now. They've been kind of sitting in this holding pattern for a while now. And it's going to take something more or less, not necessarily a catastrophe, but something dramatic for that 10-year note, which tends to be kind of the thing where rates have been following mortgage-backed securities for over probably the last 6 to 9 months, pretty hand in hand. And I don't think it's going to, really dip between the 1.9 that it's at currently. So for people that are on the fence, that are floating their rate right now, I would say that, now's just a great time to go ahead and lock in. I'm looking at it right now. The U.S. 10-year is at 1.919, and it's going to take a lot for it to break below 1.9.
And you're highlighting, Ryan, that we talk about all the time, is getting your information from the media or politicians or even from the industry groups is the wrong place to get it. You have to get it from your local expert who understands all the intricacies, not just the headline numbers.
Correct. And not Warren Buffett when it comes to real estate. You know what I mean? But and then that's kind of a lot of people do, there's these figureheads that are out there that think they know everything.
Yeah, well, the media, it's like the Wizard of Oz. He's back there behind blowing smoke and making proclamations, and everybody's just bowing their head and saying, "Oh, he must be right because he's the Grand Wizard." But
speaking of the Grand Wizard, Fed Chair Ben Bernanke.
Same thing. Like, he's the one who said we didn't have a housing crisis on the horizon, subprime is contained, and all that stuff. And now we're supposed to listen to him because he says, here's what's going to happen with the economy. People are willing to believe the same figureheads over and over again in spite of the fact that they've been incorrect.
Absolutely.
Or have no business really even prognosticating.
I agree. I agree with you wholeheartedly there. And Ben Bernanke's actually speaking this Wednesday. Other Fed officials have been talking about potential of another easing move from the Fed. Obviously, there is little appetite for another round of mortgage-backed security purchases or any other easing moves, as long as the economic outlook continues to be strong. The Fed doesn't need to be adding more to its balance sheet, but this is a potential move that they could make. Do you think that they're going to do this, Louis? I mean,
they only know how to do one thing,
and it's
buy bad assets and
right.
Money. So whether they should be doing it or not, even the way they think, I'm not sure. They shouldn't be doing it at all. But the way they think is that there's times when you need to do it more than others.
And I guess more of my question, too, is do you think that there might be some political motives going on with that as well?
Well, they probably want to politically to do more easing just because they think that helps the economy short term.
Yeah. Yeah, so that he's speaking on Wednesday, so this could be a market mover depending upon what he says. So once again, if you are in a situation where you're, trying to buy a home or you're in a refinance and you're floating right now, these are critical things that can move markets one way or the other. So anytime that you have something big like Bernanke speaking on Wednesday, I typically would tell people that you might want to consider locking your interest rate in. That
he generally moves the market one way or another, at least in the short term.
Absolutely. And you know what? As low as interest rates are now, you have a lot more room for them to go up than down.
Yeah. What can you imagine him saying that would make them go down further in such a dramatic fashion that would offset the possibility that they would go upward?
Well, the thing that he'll say that would absolutely make rates go down further is if they continue to want to buy mortgage-backed securities, more of them. You know what I mean? And in an extreme amount. But outside of that, everything else says basically that, the economy is somewhat getting stronger, which would then force interest rates to go back up.
Well, financially, if you're just trying to make a move, if you thought he was going to say that, you would buy gold or silver.
Yep. Yeah, but they're very careful about their language, I've noticed. And, it's like they don't want to hint at that at all. It's like they know that the economy is somewhat stagnant, but they don't want to make it seem like, we're really, really struggling. And it's interesting because everything, there's so many different dynamics to the economy. Like one report today was that Lowe's had a higher profit last quarter than they expected. Well, we've also had a very unusual season where people have been able to go to Lowe's and do things around their house that they typically wouldn't do in January. You know what I mean? So
sure, that's right. If you have spring in January, you go out and you buy garden supplies. If you have a blizzard, you don't go out. Maybe you buy a
snow shovel. That's about it.
Yeah, do they sell that stuff at Lowe's?
Yes, they do. Yeah, they do. But, it's just, to me, like, that's not necessarily an indicator that all of a sudden the economy is moving in the right direction. But the media grabs a hold of that. And they're like, oh, well, look, Lowe's is doing better. It must be, the housing market must be rebounding somewhat.
Yeah, maybe Lowe's had a sale. I mean, Lowe's is not a prime indicator of the economy, especially 1 month of Lowe's reporting.
Yeah, I agree. I agree with you. And I just thought that when I saw the headline come across, I was like, that's interesting. And
they have to create a news story of the day. And
Yep.
so that becomes the news story of the day. But the problem is people see that and they think, oh, there's proof.
Yeah.
Close a good month.
And then, the DC metro area, like I said, it is a fantastic people to buy in if they have, if they got a stable job. They're trying to not pay their landlord anymore, which their rents are rising, month over month. I mean, I'm literally getting bombarded with calls lately, Lewis, that's just like, I can't rent anymore because he keeps raising my rent up every 6 months to 12 months. And that's just in a nutshell. They're like, I just have to find a better alternative. Well, guess what your alternative is?
Those are rational reasons to buy a house, not that Lowe's had a good month.
Absolutely. And I think, when you...
And again, it's a local reason.
Yeah, it's a local reason. And you actually, I believe you talked with, and you're quoted in an article for Fox Business talking about how foreclosures affect buyers and sellers. And it's interesting because this is it doesn't really apply to the DC metro area just because we don't have near as many foreclosures as the rest of the country. We do have quite a bit of short sales, but not as many foreclosures. And I believe you were, you made a lot of sense in the article, basically stating that,
Of course they did. They wouldn't have quoted me.
foreclosures and short sales have widened the gap between sellers and buyers' perception of prices. And that sellers think their home is worth more than it really is, and buyers think that prices are too high. And I think that that's like always the case. But when the media is pumping out here that there's all these foreclosure deals, it makes things even more, like where you can't get a deal done because the seller's like, well, I'm not coming off my price because I know my house is worth more than that. And the buyer's like, well, I know there's foreclosure deals out there, so if they don't want to come down off their price, then I'll just go find a short sale or foreclosure that will.
Right, and neither the buyer nor the seller is probably listening to their advisor, their realtor, about what the actual homes are worth. I mean, the seller, many times they don't listen to the realtor. They want to price it higher because they need the money. They want a higher price. And the buyer just doesn't believe that home prices are still that expensive given the fact that there's foreclosures and short sales in the market.
Yeah, and things are so price sensitive lately that, in the DC metro area, let's just say if you're looking for a home, a single family home under $350,000, probably going to be a lot of competition for that. And so I really think that regardless of the condition of that home, it probably has a good chance to sell just because people have to find a place to live, and it's probably might be a cheaper alternative than renting where they're at right now. But once you start to go up in price, I think that it becomes more important that, the property is staged, it looks good. You're really pricing it aggressively to sell and not just, saying, well, I think that my house is worth 600 just because I think so. But the whole thing in the backdrop there is that everybody that's coming in that may be a first-time home buyer or somebody that's looking to move up, they all are looking for deals. Now, I'm not saying that you can't find them, but there's a lot less deals, at least in the DC metro area, than there is in the rest of the country.
Well, that's the point, is that the media generally, Fox Business or any of the major media outlets, are talking generally about the national real estate markets, of which there really isn't one. They're all a series of local markets, and in some markets, it's correct. Foreclosures dominate, and you can get a really low price on a home. In other areas, it doesn't have as much of an impact.
Absolutely. We're coming up on a break, but when we come back, we're going to dive further into interest rates and pricing your home and the condition of your home and trying to get it sold in today's market. When we come back, stay right there.